Welcome back. In Part 1, we covered tips and I-bonds to government-backed, inflation-protected investments that are perfect for beginners. Now, let's move on to 3 more low-risk options that balance safety, liquidity, and growth. High-yield savings accounts, HYSAs, treasury bills, T-bills, conservative ETFs. These are the investments that round out a beginner's portfolio, giving you flexibility and stability while still growing your money. Investment number 3, high-yield savings accounts. First up, high-yield savings accounts, or HYSAs. Why HYSAs are perfect for beginners? Liquidity. You can withdraw your money anytime. Higher interest rates than traditional savings accounts. Low risk. Your money is FDIC insured, up to $250,000 in the U.S. Think of an HYSA as your emergency fund. This is where you park money you might need in the short term without sacrificing growth. Pro tip: look for HYSAs with 1.5% to 4% APY in 2025. Even though it's not a massive return, your money grows while you sleep, and you maintain peace of mind knowing it's safe and accessible. Investment number 4, treasury bills. Next, let's talk about treasury bills, or T-bills are short-term government securities, usually 4, 8, 13, 26, or 52 weeks, and here's why they're great for beginners. Virtually risk-free, backed by the U.S. government, higher interest than regular savings accounts. Short-term liquidity money is tied up for just a few weeks or months. Imagine putting $1,000 into a 13-week T-bill at 5% annualized yield. In just 3 months, your money earns a safe, predictable return. Pro tip: T-bills are perfect for short-term savings goals. Money you don't want in the stock market yet. Building confidence in investing without worrying about losses. Investment number 5, conservative ETFs. Finally, let's cover conservative ETFs, the beginner-friendly way to dip your toes into the stock market. ETFs, exchange traded funds, are baskets of stocks or bonds that spread your risk. Conservative ETFs focus on stability instead of aggressive growth. Examples: VOOS, NP 500 ETF, VTI, Total Market ETF, BND, Total Bond Market ETF, SCHD, Dividend-focused ETF. Why conservative? ETFs are great for beginners. Diversification reduces risk of big losses. Long-term growth. Historically, ETFs grow steadily over decades. Passive investing. No need to pick individual stocks. Pro tip: start with a small allocation, maybe 5 to 10% of your portfolio. Watch it grow slowly and steadily, while your other low-risk investments protect your money. How these 5 investments work together. Now that you know all 5 low-risk options, let's see how they fit together in a beginner's portfolio. Investment purpose: allocation. Example: HYSA, emergency fund / liquid cash, 40%. Tips: inflation protection, 15%. I-bonds: inflation plus guaranteed growth, 15%. T-bills: short-term stable returns, 20%. Conservative ETFs: long-term growth, 10%. This mix gives you safety. Most money is in government-backed accounts. Inflation protection, tips plus I-bond. Liquidity: HYSA plus T-bills. Long-term growth ETFs. Confidence and discipline: you see steady results without stress. Transition. Curiosity hook. In Part 3, we'll dive into real-world examples using actual dollar amounts.